Okay, so let's talk about the summary of this week's mastermind. Here we go. The first topic that we have an open session where everybody can ask any question about anything. So this one was very dynamic. The first topic that we talk is having multiple mortgage licenses in different provinces. And the summary of this is that unless you have a lot of volume in a second province, it's not worthwhile to have a secondary license in another province. And kind of some metrics might be the moment you start doing about one file a month in another province. So if you're licensed in Ontario and you start seeing that one of your files per month goes to another province, it may be worth looking at. But before, let's say about 12, it may not be worthwhile. All the hassle, licensing, education, and everything of doing that is better just to co-broker their file or use some of the submission desks in some of the companies that are there out there in the marketplace. The second thing that we talked about was losing clients to banks. And we had a very good discussion. James and other people had really good insights where a lot of brokers, all of us, we believe that we have a client when we actually don't have a client. They're just talking to us to see if we are the right fit. We have to make sure that they are the right fit for us, and the client has the option, or they're looking at if we are the right fit. So just don't confuse an opportunity to do a mortgage with a client application, and be crystal clear on the type of client that you will be accepting. Not everybody, because then you go into this situation. So when you're losing to a bank, perhaps it's because that wasn't a client of yours in the first place. Number three, then we diverted to how do we add value in conversations. And one of the conversations was talking always about prepayment penalties, how posted to posted are, or discounted to discounted, because those differences can have massive implications, not only well, in the rate it doesn't, but going out of the mortgage. So if the person is cost conscious going in to the mortgage via the rate, they should be also cost conscious going out of the mortgage via prepayment penalty. So we had a really nice discussion about it. Now, the other thing that we always can add value is speed. I myself have had a lot of applications that I've won just because I was quick to answer questions, quick to give good service to the client, quick to update the client on every single application. So when you have a process and you are always on top of the applications and giving feedback to the clients and updates to the clients, they recognize that value and they stay with you faster, versus when they go sometimes to a branch and they don't have any update or any feedback for days, sometimes weeks. So speed matters a lot in the mortgage business. And the second thing that you can add value is being a pro. And then we discuss about the situation where you may treat an application like a transaction, but the general view from all the brokers is that you should treat applications as accounts, because sometimes you may lose a file, but that person that you lost the file recognize your value even though he went elsewhere. He's gonna in the future come back to you because of your professionalism, or he may refer to you 2 or 3 files. So you may lose 1 file, but you get 3 in return because you became a pro, and that person recognized that, and they will refer more people in return. So be a pro and make sure that you understand that this business has a lot to do with emotional maturity. So you have to manage your own emotions, and you need to understand and how to guide clients to manage their own emotions as well. And the last topic that we discussed is some agents wanted to know how RBC calculates rental income in an owner-occupied property. So if they have a basement suite or they have any rental income in the same owner-occupied property. And our understanding is that RBC has a standard of 50% add back, but they can go up to 100% add back on the income offset. So it's not an offset, but an add back up to 100%. All the best. See you at the next mastermind.